The retail sector again in focus this morning with big chain stores like Target beating revenue and earnings expectations. Look at that 7% gain in pre-market trading. Walmart, another retail giant, set to report earnings tomorrow. And in the age of Amazon, how are these companies adapting and competing? Joining us is retail analyst, 8 Squared Chief Research Officer Hitha Herzog. What about Target's performance? Were you surprised?
Completely surprised. I thought that they were going to be terrible on top of terrible because they've put in this $7 billion investment to try to restructure their company. Basically, they've been going into these urban markets. They've been getting more product into their company, into their stores, really, to try to get that consumer in there. They've been losing market share quarter after quarter to the retail giants like Walmart and Amazon. So this is completely surprising. I think especially when you have a $7 billion investment, you're definitely going to have that have an impact on margins and revenue.
Yeah, and they're tried to get people to come in by expanding their grocery, and it hasn't taken hold, especially against Walmart. But if you look at the stock over 1 year, 3 year, 5 years, really hasn't gone anywhere. And that's a testament to how this management hasn't been able to execute their strategy, especially online. And that goes back to online sales are all about the ecosystem. Amazon sells, the Echo, where you can, hey, order me this, order me that, and it's tying everything in. And Amazon hasn't gotten their foothold. When Walmart bought Jet.com, that has to do with the subscription-based model of like pantry products, and so that's why. And Walmart's run.
Yeah, and one thing, Steve, I just wanted to point out, and we forget that Target had that huge issue with the data theft a couple of years ago, and that really tarnished the brand. People held Target in a higher place and with greater recognition than they do kind of your traditional discounters. That damaged them, and I still think some of that goes back to that data theft at the registers.
And Target once too had sort of a fashion image, Target. That yeah, the
sure.
prices were low, the prices were low, but you got a little more. Now these earnings way above expectations, but how did they compare to a year ago? It's just because we expect so little that what they did looked so good.
Well, no, I think that they lowered guidance a year ago. I mean, they reported out earnings that didn't beat expectations about a year ago. So comparables, they were pretty, they really kind of went above and beyond. But even last quarter, they guided down. So I think everyone was expecting this investment to really have an impact. But also, Target is focused on pricing strategy. Part of the reason why they keep losing market share is because Walmart is able to get those prices down. I think we're discounting, or we're not paying enough attention to the fact that the consumer really cares about pricing. And that is why Amazon, I mean, yes, you can couch surf from your house and buy things and have things delivered to your doorstep via Amazon Prime. But at the end of the day, when you have pricing that everyone gravitates to, when it's the lowest cost, that's when you're going to have that consumer stickiness. And that's what Target is really focusing on, especially with their products.
Monetization is relentless.
Exactly, exactly. I mean, it is the focus for these retailers, especially when they're going up against something like Amazon.
Yeah. I want to get to this story. Retail startups that found popularity online are expanding to brick-and-mortar locations for growth. Mattress company Casper, Razor Service, Harry's Incorporated, and eyeglass company Warby Parker all introducing their products in physical locations. Casper recently struck a deal with Target to sell some of their products nationwide. Do these collaborations help? By the way, we're going to talk to the CEO of Casper, the mattress company, coming up next hour. But do these help, these collaborations?
It's interesting. So I've been pretty vocal about not being a fan of Terry Lundgren, but he does come up. Everyone who doesn't know who Terry Lundgren is, he's the former, I guess he's the chairman of Macy's now, used to be the president and CEO. So what is going on now with Terry Lundgren? He always said that it was all about omni-channel retailing. Now, that is a buzzword. Some people don't know what that means. That basically, to break it down, that means retailers not only have to have online presence, but they have to have offline presence too. You want to hit the consumer from all angles. And so U.S. Consensus came out with a statistic that said 92% of people still go to brick and mortar stores. That's a lot. People are still going into their stores. So while Amazon may account for 42% of e-commerce sales, people are going into those stores. So
is that 8% killing margins, though?
In terms of
The brick and mortars, that it doesn't take much of a loss of sales to kill their profits.
no,
Right, exactly.
Not necessarily. I mean, I think people want to go into those stores. You need that store traffic, and there's a new term that's being called. I'm going to coin a new phrase called it's phygital. So you have to have that physical product there and that digital side in order to have a store to be profitable.
To answer your question, Steve, quarterly profits were up 8% at Target, but revenue was down, and that's not really something you want to see, right? You never want to see overall revenue falling, and then the
well, Home
profits
Depot
going
beat
up.
on the top line, bottom line, raised guidance going forward, increased their dividend. I mean, that's a defensible business. Target does not.
Yeah, and the home retailers are a different story too,
Yeah.
because home sales are going great guns.
And
Fastest pace is 10 years, and you've got prices back to where they were.
Same store sales have been killing it too, especially on those home store
Right,
retailers.
exactly.